if you master this simple strategy, you'll be able to stay ahead of many day traders. In fact, this same strategy can help you trade crypto, forex, or even gold if you're interested. But then, of course, because I personally love to trade crypto, I think it's best we stick to crypto. I think this strategy also works best on crypto. So let's get right into the video. Every day, the market buy and then also sell. So if you open your chart or if you open any crypto platform for that matter, you realize that the market doesn't stay at a particular price. It keeps going up and down. Now, that movement is what a lot of traders are able to take advantage of. Because, of course, if you are basically buying and holding for the longest time, then what you are basically doing is that you are saying, okay, I have $5,000 or I have $1,000, and then I currently want to buy maybe Bitcoin, Solana, or Ethereum, and then I'm going to be patient enough to wait for it to go up from where I bought it, and then when that price movement actually happens in future, you'll be able to sell your assets and take profit. But this buy and hold process is not that easy, because if you buy an asset, you don't really know when it's going to take off, right? But then every single day you see a lot of movement. The price moves up and then comes down, and then the volatility dies out. Then it gets to a particular point, the market closes, and then it starts again. Although the crypto market itself doesn't close, the traders who trade in the market, they do sleep, they do rest. So there's a particular point in time you realize the volatility will be low, the liquidity will be low, and a lot of people will not be in the market to push it to a particular level. So you look at the times that most of the traders are awake and trading, and then you ride with them and then you make some money for yourself. And that is what most day traders do. And in this video, that's what we are going to look at. Ideally, there are 3 different trading sessions in the world: the Asian session, the London session, and then the New York session. We will look at this probably in a later video and how you can take advantage of these sessions to be able to make money. But essentially, these sessions are when most traders are active, and these are the times where you realize that the market will start moving the most. Now, if you look at New York and then London overlap, or when New York open and then London is also open at the same time, you notice that the volatility increases, a lot of money comes into the market, and the market raises a lot. So if you are entering any trade, it can go up into your profits real quick. But then if you are opening your trades at times where maybe New York is closed, London is closed, and it's just probably Asian session, you are not going to see the volatility you normally see. So it's best you look at a particular time that most traders are active, and then you also ride along the momentum, because of course, as a day trader, you are following the market. Before we go on to the charts, let me break down this concept so that you understand the strategy end to end before we look at the actual chart. All right. So let's say currently market is moving in a downtrend. All right. So we're moving this way. Now, what you need to notice is that as the market moved from this point to this point, there was a major pullback here, right? Right back into probably this zone. Okay. Before we saw this push back to the downside. Okay. Now, this is where we need to focus the most, because our strategy is entirely built around continuation. Okay. So first off, we need to identify this pattern that the market is currently trending downwards. So the market structure needs to give us that direction that, okay, this is a clear downtrend. Now, as we have noticed that downtrend, we need to also notice where the market is currently at. Let's say on this drawing that we have here, market is currently at this level. All right. Let me draw this line well. Okay. All right. So right now, the market came all the way here, did a pullback to this zone, and then we saw this push back to the downside. And now this is where the market is. For us to know when to enter our trade, we need to have what we call a setup, because as a trader, you behave somehow like a hunter. You go out there and you set traps, and then you wait for that trap to catch something before you go out there and then you get it out of it. So in this case, we need to create some sort of setup and wait for that setup to form. Okay, so we're going to draw this line here, just simple line. Okay, let's take it up this way. All right. Now, on the basic level, if this market should trade back all the way into this line, we are going to see a push back to the downside. That is what we are anticipating. Okay. This is what we are anticipating. It could be that market could get back here, break this, and go all the way back up. That could also happen. But then, because we have identified a clear downtrend, we are anticipating that when market push all the way back up like this, we are going to see the trade down here, and then we'll be able to get the profit we are looking for. So this setup is something that you could basically use to make a lot of money from the market. And a lot of people use this simple strategy. It happens day in and day out on the chart. Okay. So basically, at this point, before you mark this level or after you mark this level, the next thing you need to look out for, which I think will help you, is that you need to look out for FVG or fair value gap, or you can also look for other blocks. Okay. And then you can use any of these to get an entry where you will trade from. Okay. These are all smart money concepts. And if you're not familiar with smart money concepts, that is cool. On the chat, I will explain a little bit more about some of these concepts and how you can use them to your own advantage. Okay. So over here we have Solana USDT and is being in a downtrend for some time now. The market was once at this point and then it traded all the way back down here. But then what happened? It went all the way back up this way before we saw the push back down. And then we went back up again. We saw the push back down, all the way back up again. We came back down, up again, and then all the way back to this point where market is currently at. Now, if you look at what I have drawn so far compared to what we were looking at before, you notice that when you identify a clear market structure, that tells you that, okay, the market is currently in a downtrend, which in this case, you can see if we take a trend line and we probably even connect from here all the way down, you notice that the market is currently in a downtrend. All right. Now, by knowing that the market is moving to the downside, all you have to do is to look for where the market is going to pull back to, and then you wait for the market to come there, and then you trade with a direction. One thing about trading is you don't want to be caught in a position where you are trading against the direction of the market, because that is the quickest way for you to lose money. And it has happened to me in the past so many times. I'll just assume that the market is going to reverse at this point. I'm going to probably be able to catch a very big move to the upside. Then I'll end up losing money just because I just couldn't understand the fact that I need to move with a direction. So this strategy that I am telling you, I'm giving you here, is one of the simplest, but at the same time is one of the, you know, the most effective ones you could probably ever use to make money on a daily basis. All right. Now let's look at this. When market pulled back all the way into this zone, you notice that there is something here, this last candle here. This is where market came, and then we saw the move back to the downside. Earlier on, I mentioned something about FVGs and other blocks. Those two are the areas that I mostly trade from. So right here, the last buy candle before the sell candles formed, that is going to be an order block where we need to take seriously. And right here is a daily time frame. So if you are noticing an order block on a daily time frame on any crypto pair or major crypto pairs like Solana, you need to take it seriously. So as soon as market tapped this order block, we saw a retest, and then boom, we had the trade all the way back to the downside. So what I would have done would probably be that I put my stop loss right here, and then I target this low where price came before the pullback. So I'll just target here. Okay. I'll just target here. And just like that, you'll be able to catch such a big move. Because look at this. As soon as market tapped this zone, we saw this sort of retest telling you that we're going to happen. All right. Now, after this retest, we saw the big move down. And this, my friend, is what I'm talking about. If you're trading this way, you are eliminating so many possibilities to lose money because this strategy barely fails. I mean, it fails sometime, but then because of risk to reward and because of the fact that you're risking way less compared to how much you're possibly going to make, you'll be able to stay profitable at the end of the day. However, if you are not having any strategy at all, what is going to happen is that you're going to risk too much sometimes, you're going to overtrade sometimes, you're going to end up blowing your account. Now, aside other blocks, another thing you can also consider is fair value gaps. So let's try to look for some fair value gap in this case and then look at how market reacted when it tapped into them. Let's say when three candles form, the middle one, the second candle, the space between that candle before the third candle, that is where we mostly term as a fair value gap because with the market, mostly it doesn't leave gaps, it doesn't leave spaces. So whenever there is a space left like that, it means that there was a quick push in the sense that if let's say a lot of people are selling, the market would tend to move faster. And when it moves fast, it leaves those gaps in the market. So whether right now or in a later future, the market is going to trade back into those fair value gaps and then close those gaps so that it doesn't leave any gap at all. Now, if you look right here, as we spotted this gap, the market came back into it and then it traded right from it. So right here, we could also get another trade from here where we could place our trade here, put our stop loss right above it, or maybe this way, but this way we'll be risking too much. So it could be right here, and then we could target this low. All right. Now, the ideal place to target would have been here, right? Because that is where market moved to before it did a pullback. However, if we were targeting here, then our risk will be too much. So because we are on a daily time frame, that is why it's looking that way. But probably if we go to 4 hour, right? And then we go back into the FVG. Oh, yeah. You realize that the fair value gap is right here. Okay. Which means that we could actually reduce our risk and probably even alter our entry right here. And then we'll target this low here, right? And then we'll be able to get a very good trade. Okay. So as you can see, these are simple strategies and simple ways you can approach the market. But of course, it's not as simple as it looks. Although it's crazy simple in practice sometimes, but because the market is moving in real time, when you are trading it in a real market, it's not all that simple or easy to do. However, because you will be able to practice over time with past data, you'll be able to see clearly maybe after you practice over a period of time. So I think you should take the idea now, go and look at your charts and then practice with past data. You could replay your charts, you could look at it and then practice over a long time. Like let's say you take 2 weeks worth of data and then you trade every single day of those 2 weeks, okay? And then you look at how this strategy is probably helping or not helping, and you look at the win rates and all of that. And again, you can come back and put a comment under this video if you think it's going to help you or not. So if you currently don't have a trading platform, you can check the description of this video. I've got a link in there which you can use to sign up to use the same trading platform I personally use to day trade crypto. It's a great one and they provide a whole lot of opportunities for you to take advantage of. Aside that, you can also join my free trading community, which is also available in the description of this video. My name is Alfred. I'll catch you in the next one.